Okay, insurance, 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 insurance. Oh my goodness. I've been in practice a long time and times have changed. This has been a big year and there's major insurance changes coming. And to be honest with you, I'm super excited. Chiropractors fought and fought and fought and fought and fought to be part of your insurance premiums starting in the 1980s. And we want to leave your insurance program. Let me put things in perspective for you. Most people that come into the clinic are in a severe emergency. Like they're literally in pain and they're guarding themselves. They're having a hard time walking in. Those sorts of things are called an emergency, and having insurance coverage for something like that is really important. And it takes a minimum of 15 to 25 visits to get out of an emergency scenario. Okay? That is not a ridiculous request. The general population, when I'm talking to people on a regular basis, they'll go, well, I never wanted to go to the chiropractor before because once you go, you have to go all the time. And I go, well, if you want a six-pack in your abdomen, right, you can't go to the gym once or twice or 3 times or 5 times or even 6 times and get any results at all. So there's a repetition that's involved for your body to learn how to be lined up, how to stay strong, how to work together, and you're using your body all day. Your body's literally forming to how you use it, right? If I pumped steroids and went to the gym for 30 days straight, I would look really different in a month. But I'd have to go to the gym every day. That's 30 times of a couple hours of doing reps to kind of train my body and what to do, and then it would start looking really different. So insurance on your house, let's say you have a fire and your roof is burnt down, it will cover what the fire damaged. It's not going to cover more than that. If you want to remodel your kitchen, if you want a new bathroom, then that's something you have to budget for, hire a contractor, and then have them do the project, or do it yourself, right? So let's just say the human body isn't so different, and the way that we use insurance is a little bit of a double standard, I would like to say. So let's empower ourselves, and not demand that the insurance cover for us to maintain and upkeep our bodies. And if we don't maintain, we're constantly in an emergency situation. So we're overwhelming the insurance company, and they become massive. Now imagine you had 500 children at home. How would you manage those kids? Okay, I think we can all agree it's not going to go so well. These insurance companies that are massive are doing the best that they can to provide coverage for emergency, but people aren't taking care of themselves. When I go out and I talk and I'm doing seminars and I'm going down to lecturing at the colleges, these students don't have their own wellness plan that are going to school to become doctors. So to get a real wellness perspective, to get in the headspace and to live in a lifestyle where you're taking care of yourself is really important, and that isn't necessarily covered by insurance. So what options do we have? Patients come in, we take care of the emergency situation, we create a treatment plan for what we call the damaged tissue in the damaged area, and then everything else that needs to be maintained, we have an ideal treatment plan and an emergency treatment plan. The insurance covers the emergency part, and sometimes it makes financial sense to use your insurance to cover that. A lot of policies nowadays are very minimal. And what do I mean by that? Well, here's a great example. Let's say you have a plan with Regence, Blue Cross Blue Shield, and this plan is $800 a month, and you have a $5,000 deductible with a $2,000 out-of-pocket maximum for the year and a 20% co-insurance with pre-authorizations on MRI and all alternative care visits. Okay? Well, that means that you're paying $800 a month times 12, right? So let's just approx, you're somewhere around $10,000 for the year. And then you have 20% co-insurance with a $2,000 out-of-pocket max. So if they give you 20 chiropractic visits, they have what they call a provider contract rate. That means that when you use insurance, I sign as a provider a contract with them that says I get paid whatever they say. So let's say my charge is $70, they paid me $43, and they're going to charge you 20%. So now you're paying $10,000 plus 20% of all your visits until you reach $2,000, and then they're going to start covering. But if you only have 20 visits, they can cut you off at 20 visits. So actually, 50% of the time when we're looking up insurance policies, as of this year 2017, only half of the insurance plans actually have coverage. What does that mean? That means that they're paying more to the physician than the patient is. We don't like to use insurance if it's costing you more as a customer, as a patient, to bill your insurance versus to get a package rate. So what does that mean? That means a lot of people come in and pay up for the year. We have like our plush package. It's $2,900 a year for a massage and adjustment every 2 weeks. So that means you're coming in with no complaints. You don't have symptoms. It is strictly upkeep. It's like mowing your lawn, de-weeding small weeds, fertilizing the garden, watering, those sorts of things. That's what that package is for. If you try to use a maintenance package for pain, it's defeating the whole entire purpose, and it's not going to match, because pain care means you need it sometimes daily, if not 3 or 4 times a week, and every 2 weeks is not enough in an emergency. It'd be like you had surgery, but they're only going to do a stitch every 2 weeks instead of doing the stitches all at once to stop the bleeding. So because most of chiropractors, acupuncturists, naturopath, our work is done internally, people don't necessarily marry those concepts together, and they get confused and try to use their coverage to save money. It does not save you money most of the time using your insurance. Now that's in my world. That's in the chiropractic, acupuncture, naturopathic world. And that, of course, does not include certain insurance contracts that are really productive. So don't get me wrong. 10 to 15% of the time, as we're calling, people have really good insurance coverage. And it's few and far between. So I get questions from all over the globe, from Australia, from Europe, and we have a completely different insurance system in Hawaii versus the mainland, and it gets really interesting. I've had to really pay very close attention to coverage. There's other things to consider when using your insurance, and the big one is you can't pick your physician necessarily. So some have a broad PPO network, which means they get a lot of providers that participate with them, and then some have a very small PPO. So what does that mean? Well, if an insurance provides me with a contract and my regular rate is $110 and they're going to pay me $20, I can't participate with them, because I have 7 girls working with me and I can't pay them to process the paperwork for you or to make the phone calls or make sure you got paid. And then by the time all the paperwork has flown around and they didn't pay, or things were denied, or things got lost, I can't stay in business, so now I can't provide medical services to you. So there are a lot of PPOs where only a small handful of doctors are actually on the list, and they are often going out of business or very slow. Benefits of a slow doctor: easy wait times, easy to schedule last minute, because they're desperate for patients and clientele. That's not a good sign. You want kind of a busy doctor that has options for making sure that they get paid well, so they're not burned out, so that they do a good job with you. A doctor that really cares about their job and they're having a good time and care about you, and they can give you the time you need. That's a big deal. Big deal. Big deal. I'm just going to emphasize that. Big deal in medicine. We have a lot of free care going on in emergency rooms for a lot of people, and we don't have enough physicians for them. So medical time spent with the patient has been cut in half to cover the decreased payments. So, as a providing PPO on insurance contracts, every year they take my reimbursement rate and they pay me less and less and less and less as prices go up and up and up and up, and the profit margin for private physicians goes down. So, what you've seen nowadays are big corporations like Rebound and Kaiser and Providence and really big centers that are drawing in large payments because the private physicians cannot pay for separate overhead. Therefore, they're working in an institution and their pay is going down, down, down. And then they have less options and more rules about how they can interact with you as a physician patient. So, using your insurance is promoting this sort of movement. And every time we give a lot of money to the insurance companies, we become more prone to getting into emergency situations.